Hello and welcome. In this video, I'm going to be discussing Price Action Pivoter version 2. It is the ultimate collection of NinjaTrader trading systems and tools that I have ever developed. I've essentially taken all of the various trading systems that I've developed over the past nearly decade, and I've put them all together in a complete package. You have things like machine learning, that's an LSTM model, quant-based, past price action, a top-of-the-line custom indicator that clearly presents all of the support and resistance levels of the market, and full control over the entire trading process, A to Z. So I'm going to jump right in. I'm going to discuss the tremendous benefits of Price Action Pivoter version 2, which I think is going to serve any trader, whether you're an independent trader, a prop trader, or even a hedge fund trader. It's going to serve you for many, many years to come. And when I say that I've taken all this data together and I've released the final version that I am very, very pleased with and I've gotten thankfully good feedback on, I really mean that. It's essentially, I've taken the best portions of the trading systems that I've developed. Moreover, I've taken input from hundreds of traders over the years, and I've developed something that essentially can be used in any market for any instrument for years and years to come. So the rules of trading are not going to change from the rules that have essentially been put into this system already. Meaning it's not the mumbo jumbo AI that literally almost everywhere you look on social media, YouTube, etc. Everybody who essentially they're not even licensed, they're not advisors of any kind. They literally will tell you, we are not advisors, okay? And yet they've come up with a system that they're calling AI, all right? And it's, as a commodity trading advisor myself, I find this to be comical, not just as a commodity trading advisor, to be frank, also as a software engineer who specializes in trading systems development. It's laughable to call something AI when in fact there's literally no machine learning, no training of data, nothing that's happening. They've taken just the basic, very simple indicator-based programmatic rules. You can maybe get away by calling that an algo, even though it's not really using much math that they know about, okay? But it essentially is, crossovers, market profile, things like that. And they've added a Renko bar to it to make it look good, which is a big flag, by the way. Anytime you see any system, anybody tout a Renko bar-based system, the flag should go right up because something's very wrong, okay? Nobody should be using Renko if they are giving you a legitimate system, okay? Renko is ignoring OHLC data. It doesn't have OHLC data, open, high, low, and close. So any backtest that you do becomes a totally inaccurate mess. It is a moot point, okay? Might as well not run a backtest with a Renko bar, okay? It's taking averages, changing the open price. It's ridiculous, okay? So it looks beautiful. It shows you, hey, the market is trending. It looks nice, granted, but it doesn't solve any problems and it is completely inaccurate, okay? So they're not using essentially also calculations at the close of the bar. So their calculations will look very good on a backtest because of the Renko bar, because they're not calculating the strategy at the close of the bar. It looks great on a backtest. I mean, you could have $30,000, $40,000, $50,000 runs in a given day, all right? But in reality, it is far from the truth when you see these people's actual trading results, okay? So as a commodity trading advisor and an actual software engineer that specializes in trading systems, take it from me, you want to use a system that is actually machine learning using a proper model, which is the LSTM model. It's a time series based model. It's the long short-term memory. And it essentially works beautifully in making predictions that are right approximately 70% of the time. And even when it's not right, I'm going to show you in this video how to take advantage of it. So 70% of the time it's right. That's an obvious play when it's right. When it's wrong, how are you going to take advantage of it? And believe me, there are traders that are using this system that are hoping that the model is wrong so they can take advantage of it. And I'm going to show you how in this video. Again, the tools that you're going to see here are tools you can use literally for the rest of your trading career, and they will never go out of style. You'll be using them day in and day out. And honestly, it doesn't take more than 15 to 20 minutes of your time a day to set it up. Obviously, when you first learn it, I don't want to make a statement that is not going to hold water. When you first learn it, it might take you some time. It might take like maybe an hour or so. But once you get the hang of it, once you watch this video a few times and you get the hang of it, right when you get this system and deploy it, it won't take you much time because you're going to know exactly what to do. I'm going to cover a lot in this video, so please stay with me all the way through the end because it's going to be to your benefit. You're going to see all the nuances that this system offers you. Everything from, if you want it to be fully automated, it can be fully automated. You want it to be semi-automated, it can be semi-automated. You want full money management, you want trade management, you want risk management, you want to be out of a trade at a given time, all of that is done. You want to trade on good days, you can select days. You want to trade any instrument of your choice, any futures instrument, you can trade it. And I'm going to show you how to do that and gather tons of data and train it like that. Okay, within minutes, the machine learning system will be trained. I'm calling it MLPriceMapper. It'll be trained via the data that you generate and you train it with. That's an actual machine learning model. You can call that AI because it is essentially using that type of environment to make a prediction. But it is actual stuff, meaning you're actually training it with real data, not some gimmick that they've called AI. All right. So I'm going to go ahead and jump right into this video. So what you see on my screen is essentially MLPriceMapper here. This is a chart with the price action pivoter V2 strategy on it. Also, you'll see this is the mid pivots PHL indicator, which comes with the suite of tools that comes with price action pivoter V2. You'll see every essentially support and resistance line that anybody is watching. Okay, so you've got traditional pivots, you've got Fibonacci pivots, you've got mid pivots, which is very important. A lot of people don't realize that. It's the 50% markup from one pivot to the next level or below that level. You also have prior high, prior low. That's obvious, but a lot of indicators don't have 2 days ago high and 2 days ago low. And so that's also many times like it acts like a magnet when it comes to prices. So what I wanted to share with you is what I did to essentially set up the trades behind on this monitor. So this is MLPriceMapper. What you want to do first of all is train MLPriceMapper. Okay, so I already ran the numbers, but I'm going to go and show you how to train it because I've gotten some questions with respect to this from clients, and so I want to make sure there's a nuance here. If you don't do it right, the data is not going to be 100% complete. So what you want is for it to be 100% complete, you just have to essentially put a check mark. And the check mark I'm referencing is once you load bulk data grabber, which comes with the price action pivoter suite of trading tools, you want to make sure that you check this box, grab all data. If you don't, what's going to happen is you're only going to get the day's data that's there in the drop down. So if I have this unchecked, I'm only going to get Monday's data. Okay, but if you want all data, then you want to use the system. Another thing about price action pivoter V2 is that it is reliant on what's happening in the past, okay, recent past. But I recommend when you load a chart, I got this question as well from clients, is you want to load 30 days of data. When you load a chart on NinjaTrader, typically it'll load 5 days, okay? Change that to 30. You're still going to load a 1 minute bar, and I'll demonstrate that in this video. But you want to load 30 days of 1 minute data because it doesn't need all 30 days, but let's give it more than it actually needs so that it can do the proper calculations in the algorithm when it's referencing past price action. Now, just a small thing when it comes to past price action. A lot of people don't know, for example, how pivots are calculated. Okay, like how is the pivot point calculated? A lot of people don't know that it's essentially yesterday's data. So you have yesterday's data, yesterday's high plus yesterday's low plus yesterday's close divided by 3. That's your pivot point. That's it. It's a simple mathematical equation. It's arithmetic, okay? So also, some people are not aware that the Fibonacci pivot point is the exact same calculation. So the number is always the same. Where the difference lies between traditional pivots and Fibonacci pivots is the resistance and support levels, the R1, R2, R3, S1, S2, S3. So with pivot points, it's a fixed number, like 2 times the pivot minus yesterday's low. That's your R1. Where with Fibonacci, it's going to be a percentage-based thing. So it's going to be like 38.2, the Fibonacci numbers, 38.2, or if you go higher 61.8, etc. And so that's essentially the difference between the two, all right? But I say that because when I produce the data, I'm going to show you something. So grab all data is what you want. And then here's what you can do for the instruments. So this is called bulk data grabber for a reason. You can literally grab all of the potential instruments within the asset class that you're looking into. So if you want to trade GC, you want to trade CL, you want to trade NQ, you want to trade ES, you want to trade 6B, whatever it is that you're trading, you can literally grab all of that data like that all together. All you have to do in NinjaTrader is make an instrument list. So go to Tools, Instrument List, create a new list, call it whatever you want, and start dropping instruments in there, okay? Then save that list, okay? I did that here. And let's just grab a short list here. So select all, we have CL, ES, FDAX is the German index, GC, NQ, SI, Silver, YM, and ZN, the notes. Okay, so I'm gonna click on select all. It just loaded that entire short list in there. Okay, you wanna make sure you want your value to be 1 because we're looking for 1 minute bars. Now the CSVs that this thing is gonna generate, we're gonna do some acrobatics with Strategy Analyzer here, okay? Strategy Analyzer, typically when you run it, as you see, when you run a backtest on Strategy Analyzer, it loads the backtested data here. So some clients, when they run it, they go, I got zeros, not understanding that what's happening is it's essentially doing some acrobatics with NinjaTrader's Strategy Analyzer backtest model. What it's doing, or the engine rather, what it's doing is it's essentially grabbing tons of data off of those charts like that. It's grabbing OHLC, open, high, low, close. It's grabbing SMAs, various different moving averages. It's grabbing Bollinger Bands. It's grabbing pivots. It's grabbing RSI, all sorts of data. And it's putting it in nice CSVs and putting it into a folder that this system will make for you on your computer. It's going to be called, the folder's name is going to be called Price Action Pivoter by Pinnacle Quant, and all of the files will get written in there automatically for you, okay? So what you want to do is to train any machine learning model, you need to give it some level of data. Different quants that you ask, different guys who do this kind of stuff at various different funds will give you different answers, okay? In my view, about 6 to 8 months, 6 to 9 months tops is good enough, because remember, we're only trying to get a prediction for the next RTH session, the upcoming RTH session, okay? So what is an RTH session? It's the regular trading hours. The market opens. If you look at the Eastern time, 9:30, my time, Pacific Standard Time, it's 6:30, right? That's when the market opens. That's RTH, regular trading hours. It goes all the way until 1 p.m. my time, Pacific Standard Time, or 4 p.m. Eastern, okay? Now that's regular trading hours. What's very important that some traders ignore when it comes to the data, the beautiful data that it gives you, is what happens in the pre-market hours, okay? So the Globex hours, some call it the Asian hours, some call it European, whatever you want to call it. It's the Globex hours, it's the pre-market hours. And that's going to start from the day prior, my time 3 p.m. Eastern, 6 p.m. That's the day prior. It goes all the way until the next day at 6:30. Now, the reason you don't have a lot of indicators that use this kind of stuff is because they don't know how to code it. It's very complicated, okay? You have to store a lot of data, and you have to essentially turn to guys like me. Many vendors on NinjaTrader, I have all of their emails, have contacted me so that I can help them with their systems on NinjaTrader. So they come up with an idea. They can do basic stuff on Strategy Builder, okay? They can tinker with the code, but they're not software developers, okay? They're not software engineers. So what they do is they contact people like me, and they'll say, hey, can you help me with this? Can you help me with that? Which is strange because essentially they're my competitor, okay? But they have contacted me because this kind of stuff is not easy. So you really need a software engineer who knows, C#, knows real NinjaScript, who can go in and make those adjustments. In fact, the tool MLPriceMapper, it's so advanced that it's not even in NinjaTrader. So I had to go outside of NinjaTrader to be able to build it. I built it in Python, which is the right language to use when you're using any type of machine learning, because it's got tons of libraries that are beautiful that people can use. And if you know what you're doing, you can grab the right library, write the right algorithm, and be able to get meaningful predictions out of the models that are already built, out of the libraries that are already built, like the LSTM model. And so that's what I've had to do. I've had to leave it, the NinjaTrader environment, to be able to come up with a good model that can make predictions, okay? So essentially all I did was load it there. Now what you want to do is you want training data. I mentioned about the 6 to 9 months. Okay, so what I'm going to do is I'm going to set this to 0601 until of last year, until 2024 today. Today is actually the 6th. So let's make it today. Why do I want all of this data? In fact, this is going to give me more data than I want by a few hours, okay? But about 8 hours or so. But the reason I want more is because I can go in and delete the stuff I don't want. What's the stuff that I don't want? I don't want, for example, what happened between 6:30 a.m. my time until now. It is now 4:19 p.m. Pacific Standard Time. So I don't want what happened after 6:30 because I want the model to make a prediction, stop at right at 6:30 this morning, okay, and make a prediction of what's going to happen the next minute all the way until RTH closes, which is 1 p.m. Okay, I hope that makes sense. So this is all you have to do. So to anybody who grabs this system, downloads it and uses it, when you're using bulk data grabber of the price action pivoter suite of tools, all you have to do is remember that you want to grab all data. Okay, and there are instances, the reason I didn't make that default is because there are instances the people that are trading only particular days with particular strategies that they're using, and it really would make more sense in their world to only grab data for that day. But for everybody else that's trading essentially or wanting to trade potentially every single trading day, then you want to grab all data, okay? And then name it something. So it's obviously going to write it to this folder right here. That's the file path. This is automatically going to be populated. It's going to be, you don't have to do anything here. For file path, just leave it as is. For file name, you can call it whatever you want. I'm going to call it YouTube video or just maybe video, okay? And that's all I'm going to do, video. It's going to append the instrument that it's running and the time. So I don't have to worry about any of that stuff, okay? To the file name. So I'll know exactly which file name it is. So we've already selected a bunch of instruments under my AITP shortlist here, but I'll show it to you guys again as to exactly what that is so that you remember. So CL all the way down to ZN. It includes ES, NQ, etc. So some people will say, well, Rafi, does this work with like the micros, like MNQ, MES? Absolutely. It works with any futures instrument, particularly what I'm going to demonstrate in this video, which is the special operations strategy of price action pivoter version 2. All right. The original main system strategy, which is fully automated, it's really designed for ES and NQ or MES and MNQ. You can trade other instruments, but it's not really designed for the other instruments. It's designed for those two. But the special operations portion, which is what I'm going to be demonstrating in this video, is for any tradable instrument, and it does require a little bit of work, okay? Meaning 15 or 20 minutes of work, just getting the data and looking at the chart. And I'm going to show you how to do that so that day in and day out, if you guys watch this video a few times, already it's going to cut your, let's say, hour and a half learning curve down to like maybe 30 minutes initially, and then after that it's going to go like 15, 20 minutes, okay? And that's all you have to do, 15 to 20 minutes of work, and you set it up, and you can literally do something else after that until the market closes. It's up to you, okay? But it does require some input from you so that you can make the right trades, because it really is determined and based on one thing. What's that? Your objective. Your objective. What's your risk to reward objective? And I'm going to show you how to think about that when it comes to setting up this strategy, okay? Setting up the parameters. It's really easy, okay? So some people will say, Rafi, will you give me a template? After this video, you're not going to need a template because the template is going to be your objective. What's your risk to reward ratio? What is your risk to reward objective? Okay. And just if you stick with me throughout this video, everything's going to make sense. Some people, what will happen is, I've looked at my YouTube statistics, guys. Some people start watching the video unbeknownst to me. They stop watching as to why, but they stop watching. I know this isn't like, there's not magical things happening behind me. This is not a Mr. Beast video or something like that. I get it. It's not interesting. Okay. I know. Here's a computer geek talking about computer geeky things. I get it, okay? But this is going to help you, okay? This is very beneficial, so stick with me all the way through, okay? All right, so 06, 01, 23, 02, 06, that's today, 24. That's all I'm going to do. So I'm going to hit run, okay? Now this is going to take, we're doing analysis on, and grabbing data rather, on 8 different instruments. So you'll see it's running backtest on AITP shortlist, calculating iteration of 1 through 8. Once it sets up, it's going to go really quickly, okay? So generally speaking, you're probably going to shave off about 2 minutes from your day. Okay, maybe not even. Here we go. In the next few seconds, it's going to be done. And so that's all. So that for it to generate it. Once it generates it, everything is now downhill. It's really easy. Okay, so see, you get all zeros. So people will say, Rafi, why did I get all zeros? What is this? Did I miss the back test? Did something happen? You didn't do anything wrong. You've done everything correctly. Watch what it did. Like I said, we did acrobatics with NinjaTrader's strategy analyzer backtest engine. Okay, watch this, guys. All right, what is this? It's all of the files that it generated when I ran it. Okay, watch this folder, Price Action Pivoter by Pinnacle Quant. Automatically, it wrote to that folder. You don't have to do anything. It's going to do it on your computer too, or your VPS machine too. Okay, so this is the files that it generated. ES, GC, NQ, YM, CL, ZN, FDAX, SI. It's everything that we saw. Now, I want you to pay attention to the size list. Okay, huge files, each one of them. It's 9 months of data. Well, 0601 until today, so it's not actually 9 months, but 6 to 9 months is where you want to be. Okay, somewhere around there. There's no written law or rule when it comes to this. Let's go ahead and take a look at the file. I'm going to run this on ES. Okay, why ES? It's the most popular, followed by NQ, I know. But ES is the most popular one. A lot of people trade ES. Millions of people trade ES. So remember how I said in the pivot calculations are from the day before? So you have to go yesterday's. This is why I said it in this video. High, yesterday's high plus low plus close divided by 3. Well, we don't have yesterday's data when it came to the 531. We don't have 530 data. This is 2023 0531, May 31st, 2023. We don't have May 30th data, so it's going to show 0. But what happens when we do get the data? There it is. It gets populated. So what are the sets, the data sets that we're collecting? Open, high, low, close, volume, RSI, Bollinger upper, Bollinger middle, of course lower, various SMAs, pivot points, and it classifies when it grabbed that data. So let's go down a little bit here. So we have pivot points, trading period, pre-market, and then you get RTH, and then you're going to get the post-market, which is 1 p.m. my time until 2 p.m. At 2 p.m. the market closes, Pacific Standard Time, the market closes, right? So we want to have all of the data is being essentially categorized as to when this price action happened. Did it happen Globex? Because that's different. RTH session has the entire industry professionals that are money managers, that have algorithms, small hedge funds of like 25 million, 50 million to large Bridgewater types, okay? They're all there. Are those guys there pre-market? Generally, no. I mean, could you imagine $1 billion going, transacting in an hour or two in a pre-market? I mean, it would totally move the market, right? It would, to their detriment. So they don't want to do that. I mean, they might have a few traders putting in 2-3 contract trades, but generally speaking, the professionals are going to show up at RTH, regular trading hours. You have non-professionals, for the most part, retail, that's trading overnight sessions. Okay, for the most part. I'm not making any categoric assessment here. Okay, this is just a general observation, which is factual. And so it's got all sorts of data, guys, that it's collecting because it wants to. Why is it collecting this data? Aha, it wants to make comparisons. It wants to make comparisons. What happened during pre-market time? What happened when the market opened RTH? Do this for the last 6, 8 months, 9 months. Now the machine learning model is picking up as to patterns, ways, and potential ranges, and it can make potentially very good predictions. As I said, generally speaking, it's going to be right about 70% of the time. And even when it's wrong, the other 30%, you can still make potentially excellent trades. And in this video, that's what I'm going to demonstrate for you guys. How in the more difficult situations, you can make it easy for yourself and have potentially profitable trading days, God willing. Okay, so let's go all the way down. And the date time column, I combined it into one. So here it is, okay? That's the date time column. However, what we want is the very last actual row so that we can tell how far up we need to move so that we can get to the 6:30 a.m. time. Because this is 4:24, because I just ran it. Let's get up to 6:30. And from 6:30 on, I'm going to delete it. Because remember, we're trying to train the MLPriceMapper, the LSTM model within MLPriceMapper, to make a prediction for the upcoming RTH session. When does RTH session begin? At 6:30 it begins. So the last actual close price is going to be 6:30 here for me. So in fact, I'll just start from 6:31, control, and it's actually shift control down. It's going to highlight everything, and then right click, left click, delete. It just got rid of all of the rows after starting from 6:31 on until the end of today. So we have now data that is essentially from May 31st of 2023 until February 6th, 6:30 a.m. Why? Again, because we're trying to make a prediction for the upcoming RTH session, which is in a minute. So let's go back up again. That is May 31st of last year, and 200 and how many rows is that? 200 and some thousand rows later, we get the very last one. So I'm just going to do control down, and it is 2004, 2006, 6:30. So everything is correct. I'm going to rename this. So save as, I want a CSV file. Okay, so that's important. So you want a CSV comma delimited file. And instead of ES, I'm just going to say video ES, but I'm going to put 6:30 there. So I'm going to put ends 6:30. So this is in the future, if I want to ever reference this 6:30A, I can know that that is exactly when it ended. I have the actual instrument, which is ES, and I probably, for even clarity's sake, I can just do that. In fact, I'll just do it here. So ends 6:30A. For me, it wouldn't make a difference, but for this video, I want to be as clear as possible. So ends 6:38, ES 0324, 0206, that is the month and the day, 2024, and then you have down to the milliseconds. Okay, that's too much information, but it's there in case you need it. Okay, so, and I did that in case people run this like concurrently. They keep running it like every few minutes they run it again. They'll know exactly when they've run it, when the last time that they run it is. So let's go ahead and save this, and it's going to say, are you sure, blah blah blah. Yes, yes, we're sure. All right, so now the fun part. Okay, so we're going to essentially train MLPriceMapper. Let's get this nicely loaded. Okay, so this is where it says reads, enter the name of your CSV file. That's the CSV file that I just named, but I don't have to remember what it is. I just have to go back here, right click on it, okay, left click rename, control C, okay, and I'm going to control V it. So I just copied with control C, control V, I'm going to paste it, and then I'm going to append it. I'm going to add .csv. Looked complicated, didn't it? I'm going to hit enter. Now I wait. In a matter of less than a minute, it is going to go through 12 different iterations or epochs of the entire data set, and it is going to, just like that, and it's going to make a prediction for us. Okay, so based on the prediction, let's read some, I guess, literature here. LSTM forecasting model by Pinnacle Quant. That is the file that I ran. That's the time that it ran this report. Okay, predicted price direction higher. Higher? Higher than what? Aha, good question. It is higher than the very last close price of the last row of the CSV file. So the close prices are in E column, and that is the close price, 49.69.75. That's the last close price that it has for ES at RTH. So the model is saying by the time RTH close comes around, 1 p.m. Pacific time, 4 p.m. Eastern, okay? By the time we hit that RTH close 1 o'clock sharp, boom, the model is anticipating that the price will be higher than 49.69.75. So when I ask the question higher than what, the answer is higher than the very last close price entry you have in the CSV. Again, the E column is your close price. If you go back up, you can see the column close, and you go back down, and so control down. The last one for E is 49.69.75. So we've already made that determination. All right, It's got a second prediction in there. It says, or it reads, predicted price range 4967.31, ignore decimal points, to 5005.19. What is that? It's giving you a low and a high range for that upcoming RTH session based on the last couple of sessions. It's comparing pre-market to RTH. Pre-market to RTH. It's grabbing the means and it's grabbing the standard deviation of the mean. One standard deviation of the mean. Okay? And it's saying, all right, based on the data we have, this is the prediction. Is the prediction always right? No. As I mentioned in this video, it's about 70% of the time it's correct because it's one standard deviation. All right? It isn't correct. That means 30% of the time, but we can still take advantage of it. I'm going to show you what I mean. Now, let's discuss briefly why it may be off. Okay? Lots of reasons, but primarily, it usually gets off when there's some sort of volatility in the marketplace that's based on some sort of usually unexpected news. I don't want to say news. I want to say unexpected news. What was the market expecting? The market likes to have this sort of thematic statements that it makes, and everybody sort of falls in line. And they get it out to their news contacts, the anchors, CNBC, etc. And once they start disseminating this information, then they hit Twitter or now X, and they get that information out. And the prevailing thought was that the Fed is going to make between 5 to 6 cuts by the end of this year. They were expecting some good news when recently Chair Powell made an announcement. They didn't get what they were expecting. Okay? During the question and answer session, Chair Powell further stated that he doesn't think March is going to get one either. Okay? That doesn't mean it doesn't, but he says it's not usually. He likes to be very accurate. Okay? He tries to be. Because he knows how important every word is that he's uttering from that stage. So that messed some theses up. Okay? So they were putting a lot of emphasis on that. However, a bull usually tries to find another something else to hang their hat on, another thesis to hang their hat on. So here's the new revised bullish thesis. I'm not saying I'm a bull. I'm just saying that's how generally a person who's bullish thinks. The new bullish thesis is that there are going to be cuts, but it's not as many as we anticipated. Now, we also know historically February is typically sort of a volatile, zigzaggy type of a month. Nonetheless, this prediction is based on stuff that people have traded with for decades. Decades, okay? What is that? It's one basic principle. Price tends to revert to the mean. Now, if you're in a trading session, you have 6.5 hours in your RTH trading session, okay? During that time, if price goes outside of that standard deviation, what we think is going to happen is price is going to revert to the mean. But let me give you a corollary, okay, to that rule. That is usually the case, yes, but there has to be enough time in the fight for that to happen. Meaning if that leaves the standard deviation and is now outside of one standard deviation, we're expecting back to a reversion to the mean. Well, if there's only 20 minutes left in the market until RTH closes, there's not enough time for it to necessarily get there. It may, but you're going up against the grain there. Okay, generally you want to have at least half the battle still open, undetermined. Okay, so that you can then say, okay, we think now that odds are that it may revert back to the mean. Okay, so standard deviation, let's assume, is here. It goes way below standard deviation. What do we think is going to happen? If it gave us a low range of 49.67, let's assume my hand here is 49.67. If price gets here, what do I think is going to happen? And it's like the initial hour of trading right now. What do I think is going to happen? What I think is going to happen based on this prediction is that price is going to go back up again, back to the mean. That's what I think is going to happen. In a very simplistic term, and I'm going to plot this on a chart. I'm going to map this on a chart, thus I call it the MLPriceMapper. Okay? Now it's saying the high is 5,005. Now, right off the bat, when you look at that number, you should see zeros there, right? The 5,000. Anytime you see two zeros, that's a psychological number. Some argue that a 5 at the end is a psychological number. Okay, granted. But what we know pretty much people get either excited or nervous about is when it hits that double zero. 4,900, exactly. 4,800, 5,000, okay? Those double zeros, people get either excited, they're like, let's pass that 5,000, let's get to 5,010, or right at 5,000, there's a pullback, and then maybe it goes back up and crosses that 5,000. But it's a psychological number is my point. So bear that in mind, okay? So that's a high number. But again, does that mean that the market we're anticipating is going to hit 49.67 and or it's going to hit 5,005? No. It's saying the price is between that. Okay, it's going to be between that. Now, a lot of traders would hope, especially, that it goes below the low range. Why? Because many traders tend to be bullish. Okay, majority of traders are bullish, about 2/3. Okay, about a third are bearish. That's usually historically accurate. It's not always going to be to a T, but generally, historically. So if it goes below 49.67, they get excited. Why? Because they want it to actually go below 49.67 because they feel like they kind of bought at the lows. Okay, that's why. Now let's map this on a chart. Okay, now it's going to make tons of sense. I hope you guys have stayed with me thus far. Continue to be, watching this video all the way to the end. Again, I'm going to keep saying that because it's only going to benefit you guys. Okay, so let's take a look at this. All right. First of all, I'm going to turn off the strategy. I'm going to disable it so that I can, clearly explain everything that's happening here. So this was the strategy, just so that I'm not hiding anything. This is the strategy that was enabled. Okay. And I'm just going to go ahead and turn it off right now by just click on the checkbox for enable. This is for somebody who's new. Click on apply and it's gone. Click on OK. You're clear. All right. So this is price action pivoter V2 loaded. You get a clean chart. Okay. It's not enabled yet because I want to see a clean chart. So I've loaded essentially 30 days of 1 minute data on this chart. All right. So let's just do it from scratch so that somebody who gets this and downloads it and wants to use it, this is what they would look at. All right. So this part of it, main system strategy, and I had this in the original version of price action pivoter. Nothing has changed there. Okay. Essentially, it's a fully automated trading system. In the other video that I have for price action pivoter, you see the actual back-tested hypothetical performance numbers there, and it's fantastic. Okay, it does exactly what it's supposed to do. It essentially, you can just literally turn it on, type in your risk to reward ratio, type in what days you want to trade, what time you want to trade, pick your instrument, hit enable, walk away, do your thing. But I do recommend that before the market closes, this system flattens. Right now, I've set it up to flatten at 12:59 my time, so 1 minute before RTH close of 1 o'clock. Make sure you log in or check either on your phone or something, some way of checking on your computer so that to ensure you are out. Now, what I'm doing to protect you as much as possible is I'm putting a profit target and a stop immediately upon entry. It will be sitting on your broker servers. Okay? So right off the bat, right when you enter a trade, I'm trying to protect you that way. But it's good until closed, so those drop off. So you want to make sure that if you want to be out of a trade, God forbid, NinjaTrader has crashed, my system will work. I mean, it's a program. It's going to keep running no matter what. It has no emotions. It has no feelings. It's going to keep running. But if your computer has crashed, if NinjaTrader has crashed, if your internet has crashed, yeah, it's not going to be able to exit at 12:59. So in those instances, what people typically tend to do is if they cannot automatically reconnect, they call it in. Okay? So those are emergency situations, which is why some people prefer to trade on VPSs. So when they're using an automated system where they're not sitting in front of the machine, in front of their computers, they prefer to use a VPS system. Okay? The VPS, the whole point of it is the hosting company, it's a virtual private server, VPS, is supposed to be handling that for you. They're supposed to make sure that the server runs and their internet connection is going to be really fast too. Not that it makes a difference really because this is not an HFT model. But it is, you know, their internet is usually fast, they're up and running, and they're supposed to be responsible for that. Okay, so they usually take care of that stuff for you, so you don't have to worry about it. So that reduces a lot of the angst that goes along with it. Did it crash? Did it not crash? Because they're supposed to handle that for you if they're doing their job right. Okay, so that's it. I mean, let me just show you what I had. So when I load the strategy, it's going to load automatically the mid pivot points PHL indicator, which comes with the suite of tools. So you don't have to necessarily load the strategy to get the indicator. The indicator comes installed. All you have to do is you can go to indicators and load it separately without the strategy if you ever want to look at the chart by itself, just the indicator. Okay, so without the strategy being enabled. But I'm going to enable it here. Okay, before I actually turn it on, let me do this. So I'm not going to turn it on, but I do want to load the rest of it so that you can see exactly what's happening with the actual support and resistance levels. And there are many of them. Okay, so there isn't in trading one support and one resistance line. With this strategy, price action pivoter V2 in special operations, the tactical trading strategy, you can dictate the price you want it to go long or short on, literally the price. Okay, so you can say 49.60, I want to go long. 49.60.50, I want to go long. You can dictate the exact price that you want the system to enter. There are rules that it has to still meet. I'll discuss those, but you can dictate the price, which is, for a lot of serious traders, active day traders, that's exactly the model that they wanted. That's the feedback that I got as well. And so that is something that is very, very helpful to those that trade levels. So they look at various levels here. You have prior low, prior high, pivot, etc. Those are the levels that they're watching. What happens if it crosses above or below those levels? Okay. So with the higher prediction that MLPriceMapper made, the prediction is for the 1 o'clock RTH close. Does price move in a linear fashion? Like this or like this, linear fashion? No, it doesn't. It never, almost never moves in a linear fashion unless there's some amazing news that's come out and it's straight up, or some horrific news that's come out and straight down. It almost never does that. Okay? It's usually a zigzag, you know, up and down, making V's, making M's, all the way until it gets to wherever it's going to get to. Okay? So you can take advantage of that volatility. You can totally take advantage of it. It made a prediction that said the range should be between 49.67 on the low end to 5,005 on the high end. All right. Right when if you had this chart loaded already, if you just had the mid pivot points indicator, which is right here, okay, mid pivot points, pivot range, that's the indicator's name. If you had that enabled, whether separately or with the strategy itself, if you just enable the strategy, the indicator automatically loads. Okay, this is a custom indicator where I've added 2 days ago high, 2 days ago low numbers and Fibonacci pivot points as well. So what you want to look at is say, okay, it's at 49.67 on MLPriceMapper. So MLPriceMapper said, let's minimize that a little bit. It predicted 49.67 on the low end. Well, as you look at it, you're like, huh. So here's imagine this is your trading morning, okay, right at 6:30. This is it. You know that pivot level is at 49.59 right off the bat, and it's already incredibly low to close to that 49.67 price. Could it, as you look at it, you know, zigging and zagging inside of the pivot level, could it do that again? Okay, and you see PP, that's pivot point traditional, and then also PP fib. I discussed this earlier in the video. It's the same exact calculation, so it's the same exact number. Okay, the differences happens on the support and resistance levels between the traditional and the Fibonacci pivots. So is it possible it gets to this number again? Guys, the initial strategy, where it's a fully automated trading strategy, it is literally built on it doing that. It goes through these different levels many, many times. It crosses through them. It's part of the price action pivoter first strategy, the main system strategy. It does it all the time. It goes in and out of those levels. Okay, it's testing. The market likes to test price. That's what the market does. Because remember, it's an auction. Nobody knows what the right price is. It needs to get tested. Once it gets tested, the market feels better about it. Especially not if it's just one test, but multiple tests. Okay, then the more tests you get, the more the market feels better about that price range. So if it gets to that price range again, to that price level again, the market wants to buy it. Remember, most of the market wants to buy, not sell. I know that bears hate hearing that, okay? I know, believe me, I've many clients that are incredibly bearish in their viewpoints, okay? But the majority of people like to buy, all right? When you hear of a sale, you want to buy, okay? It's just instinctive also. Maybe we're hardwired in, I don't know. But that's what it is, okay? We want to buy. All right, could it come back down again? It could. And if it does, I mean, it's done it multiple times already. Just by looking at a few hours, we saw that, okay? If you go back further, you're going to see that, okay, hovered, came back down. There it is again. This is the beginning of the trading session. So it was below it, above it. Came, tested it. No, yeah, we're going to do it. No, test it again. You see what's happening? Comes back all the time, guys. All the time, okay? So, all right, let's go back to 6:30. So you see, you have an option now. Here's what you have to think of. This is the key. Do I have room to make money today with this instrument? If not, there are other instruments that I can trade. Well, Rafi, what does have room mean? Do I have room? Very simple. From one level to the next, do you have room? Okay? Meaning, let's say you say to yourself, I want to make 300, God willing, I want to make 300 bucks today per contract. Let's say you're trading one contract, okay? Easy, one contract. All right. Well, here's 49.59. That's the price level there. What's the next level of potential resistance? What is it? You have a couple of things here. R1 fib is right here. Let's take a look at it so we get a more clear indication here. So R1 is at 49.71. I'm sorry, 49.76. My bad, 49.76. In between that, there is, that's why I said 71, this number, R1 mid. It's not very clear, but it's there. R1 mid, okay? That is the midpoint between your pivot point and R1, 50% mark. Anytime you have an auction, guys, and two people don't know the price, the middle price is sort of the area where both people feel like they won something, okay? A compromise was made. Bulls and bears, the mid price, okay? It's like that in anything. If you were to find something in grandma's attic and you open it up, it's this beautiful shiny box and it's got some company's name on it and it's got the year 1891 under. You're like, whoa, what is this antique? It must be very important in this nice shiny box that grandma's club. I mean, it must be good. It must be something. Take it to a guy who can price this thing. He's going to look at it and go, oh, well, I'm going to say it's $30,000. You're going to say, why is it $30,000? He's going to say, well, one guy bought it at $10,000. One guy bought it at $50,000. I'm going to say it's $30,000. Okay? He took the 10 plus 50, 60,000 divided by 2, 30. He took the middle price. Okay? So he's saying it's normal human behavior. It's just how we think about things. So mid is a very important number. Meaning you could have, if you were to enter a trade here at 49.59 and 49.60, a potential exit would be 49.70, 49.71, or a little bit before that, just to be on the safe side, okay? So that means you have about $500 worth of room there. That's the room that I'm talking about. Now, conversely, the prediction was 49.67, right? Well, I don't want to go all the way until the next level from 49.59. If I were to go short, it's 49.49, okay? We're hitting that psychological zero number, 49.50. And it's really far below the 49.67 low prediction that MLPriceMapper made, okay? So the low range was 49.67. Well, that's pretty far off. I could do that. Potentially it's there for me, but the prediction is that it's going to go higher. Okay, so I'm going to stick to the data, and I'm going to be data-driven, and I'm going to essentially think of what the data's prediction is based on the actual model and place my bets accordingly. Now, that's on the long side. Here's what I'm looking for. I'm looking for, and I'm hoping, price comes really down. I mean, I kind of hope that it goes to like 49.50 or something like that. That'd be great, because if it goes higher than that price, if it comes back and retests the 49.59 pivot point level, that's when I want to go long, because I have about $500 worth of room there until I get to R1 mid. Okay. Now, in the actual strategy, here's what I did. All right. You remember the half rule. Okay. That's very important to remember the half rule. So let's go ahead and uncheck this so that we can have access to the parameters. Okay. Now we have access to the parameters. I'm not going to do price action pivoter main system. I have the whole other video for price action pivoter, the original version. It's beautiful. It works as is. Nothing has been changed. Okay. V2 has special operations, the tactical strategy, trading strategy. It's called MLPriceMapper strategy because you're mapping the prediction based on the chart. Okay. I'm going to pick 6:30 to 12:30. Now, some people don't want to trade that initial hour, which is why I have these types of times, right? Some systems don't have any times in them because you just turn it on. It's a black box. You don't even know what it's doing. But it's essentially, some people want to skip that initial hour completely because it tends to be more volatile. It really is, again, dependent on you. How much risk do you want to take? If you want to be more conservative, yes, you want to start at 7:30, in my opinion. Okay? If you want to be conservative, start at 7:30. If you just want to start at 6:30, take a little bit more risk. It all depends how many contracts you're trading. It all depends on what your stop is. It all depends how you set up your trade management and your money management. So it all depends on you, on your risk tolerance, on your risk reward objective. Okay? Remember I said it was 49.59 on the pivot level, right? So 49.60. If it crosses above 49.60, let me give you the remaining rules. Okay? It needs to have 2 consecutive green bars. The close price of the bar must be at least that number of the last 5 bars. It's essentially taking the last 5 bars. Okay? The 49.60 price, one of those last 5 bars must have closed above it, touched it, and closed above it. And it has to be 2 consecutive green bars. And the final green bar's body must be bigger than its upper wick. Okay? So it must be bigger than that little shadow that you see above it. That's the upper wick. It needs to be bigger than that. The body needs to be bigger than that. Okay. So I'm saying if it gets to 49.60, then I want to go for it. Okay? It's got to cross it with 2 consecutive green bars. Now I'm going to set up the trade. Let's first start slow. Okay? And we'll build it up to 1,000. All right? I'll show you what's going to happen. Here's 500. Let's do this at 4. So 4, remember I told you this, you have to set up the trade. So I'm saying if there is a net session profit limit of $500 or more, stop looking for further trades when we're out of the trade, when we've exited. Same is true on the loss side. If I've lost $500 or more, when I'm flat, get me out, turn off the system. I'm done for the day. Tomorrow's another day. Okay? Maximum number of trades, 4 in this case. So if I have 4, that means if it gets to the 4th trade, once it exits, that's it. It's not going to take any more trades. 2 is if it has 2 consecutive losses in any given direction, it's going to switch directions. For this test, because the price is so low, I'm going only for longs. Because it said the low price is 49.67 on the prediction model. Well, we're already at 2 handles away from that price. Okay, so it's either going to go above it, it's going to go above that price, or it's going to drop below it. Okay, but I will discuss. Okay, why did I think about it going over it? We can discuss that as well. All right, in this video. Now, the peak, high, low trailing stop. Very important number. Very important number. Why did I choose 150 here? All right, here's why. Because I gave myself a minimum profit potential on the long of $400. That means it's going to enter the trade if I have, counting from the close of the entry bar until the very next resistance level, $400 of potential profit that I can make. Does it have at least $400 worth of room? Then I'm interested in systematically entering this trade. That's why I said it'll automatically do that, but you don't even have to think about it. You can determine that up front. You can say, look, if it's got at least $400 worth of room, I'm interested in taking that trade. Remember the half rule that I said? Okay. I'm putting my long unrealized minimum peak profit number at 150. It is less than half that number, just to be on the safe side. Less than half of that 400. at 150. It doesn't mean it's going to exit at 150. Not at all. It just means it's going to start trailing the price from the unrealized peak high, starting from $150 worth of unrealized profit. Okay? And the system calculates everything every 60 seconds. Okay? So if it's got, $150, bar 1, bar 2, it's got $500. It started trailing it from bar 1 at 150, and it's parking the stop 25% away from the unrealized peak high, whatever that peak high is since you entered that trade. Okay, that's what it's doing. My profit target, 100 ticks. Hopefully I hit a home run, 100 ticks, great. Does that happen every day? No, it does happen once in a while. Throughout the month, it can happen, 2, 3, 4 times, who knows? Sometimes there are weird months where price tends to get sort of sideways and starts to get, range bound. In those situations, it's going to be harder, okay? But you'll have to determine that. February could be one of those months. It doesn't mean you can't make money. I'll show you exactly what you mean. You just essentially put on the scalp mode, okay? When day trading has many elements to it. One of them is, of course, scalping. If you see that price is getting into those types of ranges where it's getting volatile, but it's like nicely volatile, where it's nice range and it's got big, beautiful volatility, we love that as a day trader. We want that, okay? As an investor, if you were buying stocks or something, you're like, please go higher, higher. But as a day trader, you want to take advantage of that. You can enter multiple trades in a situation like that, and I'm going to show you that here. I'm going to put my stop at 25 ticks. Guys, there is no law or rule when it comes to this. It's your risk to tolerance. So some people will say, Rafi, give me a template. Give me a template with these numbers in there. The number, if I had a template and I put that risk per trade at 100 ticks, would that be acceptable to you? It shouldn't be, because that's a lot of money for a yes. Okay, 100 ticks would be maybe somewhere in the ballpark of NQ, because that's a volatile, plus it's only $5 a tick, so it'd be $500 worth of risk for NQ, which is still significant, but NQ is very volatile, so it would make sense. But do you want to take over $1,000 worth of a risk per trade on ES? No, right? You have to essentially do what's right for you. You have to have your risk to reward ratio worked out. You have to say, well, what's the most I can lose today and not feel bad? Think of it in those terms, okay? If you don't think about how much you're going to win, that you hope for, and you hope that's what you hope for, that you always get. Think of the, worst case scenario. So it doesn't pay to be rosy in this business, okay? It doesn't pay to be optimistic in this business. It pays to be a pessimist. But you hope for the best, but you plan for the worst. And that is the best way to think about trading when it comes to day trading, okay? So I've put 25 ticks. I could have put 30. I could have put 35, whatever my risk tolerance is. I put 25, okay? It's 4x. Well, it's a 4R ratio is what I'm talking. So it's 25 ticks to 100 ticks of profit. That's 4. Some people have 3. Some people have 3.3R. Some people do 2R. It all depends, okay, on you, on your risk to reward objectives. Main system you don't have to worry about. That's with the main system strategy for set crosses. This is what I was mentioning earlier. How many times did price cross a particular level? This system is storing all of that data, including the highest price of that cross. It's a beautiful system, guys. It's truly my best work. And then here's another thing. I want to mention it here, and also for the bulk data grabber as well. So pre-market start and end time is relevant to my machine. My machine here in Los Angeles is Pacific Standard Time. So pre-market start time for me is 3 p.m. So I put military time 1500. For you, if you're in Eastern time or Central time or European time or what have you, it's going to be different. You have to put your time in, whatever your computer is running on. I have some Europeans that are still operating on Central Standard Time. So they have set up their computers so that it's on CST. Then you put in CST time. Whatever your computer is on, that's what NinjaTrader needs to be matched to, the time zone in NinjaTrader, and essentially then everything will work smoothly, okay? So make sure you do that. The same thing is true with the bulk data grabber. It's got its own times there, okay? So all of the times are relevant to my machine and Pacific Standard Time. You want to make sure that they're relevant to your machine. Change the times so that it matches the pre-market start and end time to your pre-market start and end time, the one that your machine is on, all right? So let's go ahead and enable this, okay? I'm going to run this so that you guys can see what would have happened today. But remember what I did here, guys. So I have $400 of minimum profit potential. So before it enters, even considers entering a trade, even if the price crosses at 49.60, even if it was 2 consecutive bars, if it didn't have exactly this at a minimum, 400 or more, not going to take the trade. It's got to have at least $400 worth of potential profit from the time of entry, the close price, until the next level, okay? The next resistance level, which could be one of those mids. It can be, essentially, I don't use Fibonacci pivot for resistance or support, but I do use pivot points. I use the mid pivots, and I use prior high, prior low, and I use 2 days high, 2 days low, all right? Because Fibonacci pivots are less used by traders. They are not as popular, nowhere near as popular as traditional pivots, though some traders do use them, and they have their own, they have excellent opportunity there as well, but not when it comes to resistance. Usually it's not much of resistance, not much of support level, okay? It's good when a Fibonacci level is also being matched up with another level. Like, for example, if you have a Fibonacci level being matched up with a mid-level, when you see those two together, the confluence of 2 different levels, that's very good, in my opinion. Or if you see a Fibonacci number like a S3 get matched up with a prior high or a 2 days ago high, beautiful. A 2 days ago low or a prior low, beautiful, okay? So again, you have 2 things, 2 lines that people are watching, traders are watching, that are on top of each other or very close to each other. That's good, okay? So this is how I've set it up. Let's make sure it's enabled. It is enabled. Let's make sure we have slippage, 1 tick of slippage. Okay. Remember, this is simulated, so this is hypothetical. All right, let's go and apply it. Let's see what happened. All right, so 6:30. Any trades? Nope, we said 49.60. All right, here we go. Here we go. It took off. All right. It took off, but by the time it took off, it was like 6:30. It was right here. Now, and I'm going to explain, why didn't I consider something more? Okay, why didn't I say, let's see if it crosses between, let's say if it crossed R1 mid at 49.70 until 49.76. Why couldn't we go here? Look at the numbers, guys. We have 6 handles between 49.70 and 49.76. It's actually less than 6. It's 5.5. That doesn't get me to $400. I'm trying to get to $400. So why? Because I've taken less than half of that on my potential exits. At $150 or more, it can potentially exit the trade, okay? Because the stop will be moved to 25% away from the unrealized peak high. So I have to give myself room to potentially make money, okay? You don't want to squeeze it in. Instead of squeezing it in, if there was not enough room, let's say there wasn't even $400. What do we do there? If I look at this and I go, I don't even see 400. All the lines are on top of each other. I don't see any room to make any money on ES. ES is not the end of the world. There is still NQ, there is CL, there is GC, there is the very highly volume having ZN. There is lots of different instruments that I can trade. I'm not, beholden to ES, okay? It's popular, great, but it's not the only thing in town. Okay, I can trade something else that might give me better profit to risk ratio. Okay, I want to make sure that I have my profit to risk ratio above a particular line versus below a particular line. I have enough room to make money. Okay, that's all. It's always got to be in my benefit when I'm trying to do that, when I'm trying to do a trade. The profit to risk ratio has to be my benefit. So the profit to risk ratio has to be in your benefit before you enter a trade. All right. So I said 49.60, go long. All right. Here is, all right, if it closes above 49.60, closes at or above 49.60. Here's 49.60 right there in this bar. You got 2 consecutive green bars. The final bar's body is bigger than its upper wick. It entered the trade. It exited at 49.6425. Why? Because it went up all the way to, let's make it a little bit clearer. It went up all the way to 49.6525. That's more than $150. So it entered at 61.75 and it got to 49.65. That's more than 150. It moved the trailing stop to 25% away from the unrealized peak high of 49.65.25, and that parked it at 49.64. It made money on that first trade. So you scalped it within 2 minutes, you're out of that trade. Now, Oh, by the way, this unrealized peak profit of last trade literally means that. Okay, it's the last trade's unrealized peak. Not this trade's. No, the last trade that it took. Okay, the reason I have that printed there is because it helps people to take a look at what I've got right now. So if this was your first trade, this would be correct for this first trade. Some people might say, here's a scenario, guys. Let's say this wasn't, what is this, a couple $100? Let's say it wasn't a couple. Let's say it was $1,000 that you made for one contract, and you did it in 2 minutes, right? That does seem a little, out of the ordinary, right? $1,000 in 2 minutes, one contract, that's good. You might look at this and go, gee, why should I continue the rest of today? I just made $1,000 off of one contract in 2 minutes. You may decide to turn off the strategy, go home, go golfing, I don't know, do something else, okay? Anything else. So if you have enough money that you've made from 2-minute trade, you could just turn off the system, come back tomorrow. Tomorrow's another day, right? That's why I printed this here, so that if somebody wants to just say, you know what, I'm done for today, you're done for today, okay? You've made your money. In this case, it wasn't a lot. It was 200, so I can see some people just saying, I'm going to let it run, right? Let's see what else it does. So the next trade, guess what? Remember I said it just earlier. It's going to zig and zag through the most popular zig and zag level is the pivot point, okay? And so it's going to zig and zag through it all the time, all right? So it entered again. That's 49.60 right there. Remember I said one of the last 5 bars has to cross over 49.60, and that's one right there. Boom, 2 consecutive green bars. It entered at 49.61, and it hit 49.66.75 from this 61.25 number. And once again, that's more than $150 within a few minutes. 1, 2, 3, 4, 5. On the 6th minute, it looked like the stop was already in effect. The trailing stop took you out of the trade. So you're 2 for 2. Again, if this was the exact time right now, the time was 7:40, this would be your last trade. So this statement here, unrealized peak profit, would apply to this, but it doesn't apply to this because there were more trades, okay? But if it was your last trade, it would show you that number would be applicable, okay? That statement would be applicable. Let's keep going. I did that a little too fast. I wanted to reveal it slowly. Okay, so, all right, so there was nothing here, okay? It didn't cross and get 2 consecutive green bars. Like, for example, somebody might look at this and go, why didn't it enter, for example, somewhere else? Let's say 49.60. It's got to be above that. So it didn't get it here. It had to have 2 consecutive green bars where the bar's body has to be bigger than its upper wick. That's not the case here. That's the same size. Okay. It's very minute. Okay. It's very intricate. It's got to be exactly the way I said it. Same here. You'll notice that the the body itself is much smaller than the upper wick, so it's not going to enter the trade. It's going to look for exactly that. Moreover, it's calculating the $400. So if it was too high, if it was here, for example, at 63, it doesn't get to 400. See this? If, let's say this is your entry. In fact, it could have been. This would have gone right here, okay? But if it didn't have that 400, this would have been a good entry. It has the $400 minimum profit potential that we asked for. So that's why it didn't go on this bar right here. At 63.75, between 63.75 and 70.50, you don't have $400. You have less than $400. No deal. Essentially, this gives you a way to negotiate with the market to give you the most favorable term that you can possibly ask based on whatever you're asking. In this case, we're asking $400 of room for profit potential. If I don't get that, no deal. If I get that, we have a deal. Okay, that's basically how you have to treat the market. So that's why it didn't enter there. Now, let's see if it happens again where we get a good deal. All right. And it did right there. Between 60.75 to 70.50 is more than $400. Let's go. All right. There it is. It grabbed it again. That's the 3rd time. It went against us, to be expected. See, the one thing I want to mention here is the bad beats. Any system, including this one, will have bad beats. Meaning you put your stop at 25 ticks, let's say, it goes to 26 away from your entry price, 1 tick off, takes out your stop, and goes back in the direction that you thought it was going to go into. That's life. This is the life of traders. This is the life of trading. And it's how it is always. Okay, it's always been this way. Don't get mad. Don't go on tilt. It's the market's way of saying, let's push him or her and see if they go on tilt. Because if they do, we got to work on that. Okay, don't go on tilt and start messing up and throwing out all the rules and saying no. You have rules. You stick to your own rules no matter what, because ultimately that's going to work out in your favor. Ultimately, maybe not today, maybe not even this month, but ultimately the numbers are going to make sense. Just like trades over time tends to revert to the mean even during the day, especially if you have enough hours left in the regular trading day. It tends to revert to the mean. The numbers are going to work out. Okay, you have to be patient. Traders can't be impatient. You can't expect the system to immediately make money forever and ever. It doesn't work that way. You have to take a long view. It's a marathon. You're going to be doing this potentially for the rest of your trading career, the rest of your life. I have traders, guys, that are past their 80s. One of them is 89 years old. Okay, so it's this is something you could be doing until the very last days. Okay, so it all depends. So here we go, another one. Okay, this is now the fourth trade. Remember, we set the rules. We said 4 trades, that's your maximum, or $500 worth of net profit at the exit, at the close of the bar. That's it, we're done. Those are the rules. If those are your rules, you should stick with them. You shouldn't increase the numbers again. Okay, that's getting greedy. All right, whatever your rules are, that's what you wanted. You got what you wanted. Okay, don't ask for more. So that's another thing that the market will teach you. Market is a great teacher, by the way, guys. It takes us to a whole other level of consciousness. It really does. So let's go ahead and see what happened here. All right, same thing. It went up. It passed that $150 mark, and it came back down again because we're parked at 25% away from the unrealized peak high. So we're pretty close to the price. Basically, the price came back down, took out the stop. There it is. That's your 4 trades. Okay, that's your 4 trades. So we are done for today because that's 4 trades and it's made several $100s and we're done. Okay, let's see what we got. 512, $4. 512, we're done. Okay, now we said $500 or more, it's going to stop trading. 4 trades and we're going to stop trading. But let's take a look and let's see what would have happened. What would have happened if we didn't have $500 but we had $1,000. Okay, so let me show you what we did have before I uncheck everything. 500, 500, 4, 2, right? I already unchecked enable apply. Now I can touch my parameters again. I'm going to change the 500 to 1,000. Okay, I'm going to change the 4, 10. Okay, 10 trades and it stops trading after 10 trades. Or it makes $1,000 worth of net profit and stops trading. Let's see what would have happened. Enable. We still have the slippage, obviously. Okay. So basically, it's the first trade we know about right off the bat. It's the same stuff, right? Because we just added right now. We didn't subtract anything. So we went from 500 to 1,000, from 4 to 10 trades. So you saw these 4. 1, 2, 3, 4. You saw it here. Now this is the 5th one. That you had not seen because that happened after I increased the 500 to 1,000 and I increased the 4 to 10 for the number of trades. So that is, again, pivot point. When it starts zigging and zagging, it's going to do that. Okay, it's going to zig and zag through the pivot point. Price will likely get tested at this level. Okay, especially when you're coming off of some sort of news like we just are with Fed Wednesday and some expectations were not met. So when that happens in the marketplace, expect some sort of shifts back and forth, rebalancing, etc. Okay, it's going to happen. So that's the 5th trade. It went up pretty high on that one. And 49.69, it was 49.70.50, a handle and a half away from that mid. And it's already up. Guess, look at that, guys. That's R1 mid. Now, a lot of people don't even know about this mid pivot concept, okay? But it's been around for a while. A lot of people don't talk about it. There's not a lot of indicators for it, but there are some. But there's not a lot. And let's see what happened after that. Look where it's getting rejected, guys. I mean, ticks away. Literally 1 tick away from R1 mid. It doesn't mean it's never going to cross R1 mid away. Never. No, no, no. It just means in this moment of time, traders looked at that and go, you know what, let's back down. Now, it's not just traders looking at it, by the way. 80% of it is not traders looking at it. 80% of the market today, according even to CNBC, are trading via automation. Now, not all automation is the same. You got the AI, extreme AI bot steroids, $99.99, and it's all yours, okay? You got that. That's a joke, right? Then you've got professionals who are using LSTM models and who are using actual machine learning. They're training data. They have committees where they have these types of discussions where the risk to reward ratio that we just talked about, that's decided by the portfolio manager. Okay? The traders are just going to execute what the portfolio manager said. The portfolio manager said, this is max, we're out. Then that's the max number. They're out. They're done for the day. So they have parameters and constraints with which they're working. Okay? So you have professionals. 80% of them are professionals. Even those who are professionals that are trading algorithmically. It's not like they set the trade and they immediately went to the golf course. Not so. They are sitting there looking at those monitors doing something, right? They're not, playing, games. Okay, they don't have the virtual reality headset on. It's not what they're doing. They're actually looking at the chart because they're monitoring to see what's going on, so that now they've got the data in their hands, just like the data I gave you, right? Through MLPriceMapper, they have data in their hands. They have levels in front of them. What do they want to do? They have instructions from the portfolio manager on the risk to reward ratio. They want to know what's, can I take advantage of it? Once they enter the trade, all the rules are set. Now they can just sit there and go, come on, right? Now it's waiting period, all right? But it's not like they're going to sit there by hand every 2 seconds, in, out, in, out. That's not how they're trading nowadays. Okay, it used to be that way, not anymore. All right, let's see if we have any more. And that's it. Okay, look at that. Look at that. So it took out R1 mid by a few ticks, but the systems are like absolutely not my system. The systems in general who are trading that looked at that R1 mid. See, if you didn't have that R1 mid, you didn't have that concept, didn't know about that, you're like, why did this thing get rejected so far away? Even R1 fib is not even close. Why did it get rejected? Was something here? Yeah, there is. There is a resistance line there. It's the R1 mid. Okay, so that's why it got rejected. There is something there. Everybody becomes nervous when there is news, and that news isn't necessarily favorable. So you still trade. It just you're quick on the trigger, right? You're immediately trying to get in and get out, make your money and get out. So you go from, let me see if I can get a home run today because everything is going well. It's a bullish trend. I see there's all the news is in my favor, versus we just got sort of news that we were not expecting. We thought it would be 5 or 6 cuts throughout the rest of this year. It looks like it's not going to get there. Okay, especially that he's saying no on March. Chair Powell is saying no on March, likely no on March. So that makes some people nervous. Okay, and when you get nervous, what do? You don't stay for very long in your trade. You make your money, you get out. Make your money, you get out. So guys who had algorithms that are developed, they tweak them a little bit so that they can be getting in and out of trades a lot sooner. All right, this is going to happen lots of times. So, once again, guys, there it is. There it is. And that could be the last one. Because remember, we're stopping looking for trades at 12:30. So let's see if it happens again. If it crosses the 49.60, right there. Nope, it didn't get there. 49.61.25. No. It didn't get there. Okay, so I wish it would have gone down a little bit lower at 49.60. If it would hit 49.60, we would have gotten here. We would have had a trade right here. If this was 49.60, it would have been another trade. It didn't get to 49.60. It didn't cross it, so it didn't take it. It's got to take it exactly. It's got to hit that number. One of the last 5 bars has to hit 49.60 and close above it. Okay? So that didn't happen. That would have been one more trade. But still, this is not a bad day. So this is a good day. $750, 6 trades. Okay? If you want to make this more conservative, how do you make it more conservative? Simple adjustment. Okay, watch this. Instead of 6:30, go for 7:30. That's it. I'm done. Because it's already every single part of this is already under full control. The money management, the trade management, the risk management. How much more can you add to it? Okay, even the profit, how much room you have from one level, from entry until the next resistance level. All of it is under control. Okay, so there's not much more you can do. Let's show you the parameters again. So the only thing you could have done is instead of 6:30, start at 7:30. Is there a drawback for that? Yes, there is. In everything you do to trading, there is the opposite side. Whatever you do, you want to go long, there's the short people that are going short. You want to go short, there are people that are going long. Whatever you do, there's the opposite side. There's a yin and yang in trades, okay? So what do you have to do? If you go start looking for trades at 7:30, you realize that a beautiful trade could have happened at 7 a.m. my time, and that cross could have executed there at 7 a.m. But now price is at 49.80, 49.90. Remember, the model said it can go up to 5,005 today. All right, so it could have taken off. It could have gone, all the way. It didn't, but that's what it could have happened. And so you could just start at 7:30. But the drawback is you're going to get less volatility. That initial hour of volatility is going to be skipped. You just made it more conservative for yourself. But you took a risk in that there could have been a beautiful trade that you missed out on. Okay? So that's the give and take of how you want to do this. Again, it all depends on your risk to reward ratio. So this is essentially what Price Action Pivoter version 2 is. It's introducing special operations, MLPriceMapper. And as you can see, it is a fantastic option for anybody who wants to trade. And you can do this for any instrument. They all follow essentially the same rule when it comes to this. You're going to give yourself enough profit in the profit potential. And the system's going to manage that for you. It's going to make sure you have that kind of room. If you get a particular cross at a particular level, it's going to enter the trade. And it can go both directions, long and short. So you just have to look at what the model is showing and the direction that it's showing. In fact, let's see that. Did it go higher? Okay, so remember it said that from the close price at 6:30, which is right here, this is 6:30, and it closed at 69.75. So 49.69.75. The prediction for the LSTM model MLPriceMapper is making is saying that it's going to be higher by RTH close. Again, it's not always right, guys. It's not the hand of God. Okay, it's not always right, but it is as good as we can make it. Okay, there's not much more I can add to this. Okay, in fact, there is nothing more that I can add to this. So it's 49. At 1 o'clock is what it's measuring. It's obvious. I don't have to show it to you anymore, but it's right here. 49.75. That's the 1 o'clock close. Obviously higher than 69. So was it right? Yes, it was. It was not. It was right this time. It's not always going to be right. Like I said, 70% of the time. I don't want to have expectations be more than that because it's not true. It's about 70% of the time it's right. But even if it's wrong, doesn't mean that that's a bad thing. Okay? It went off of the 2 days ago, and yesterday's mean on the highs and lows of the pre-market and RTH sessions as it compared to each other. As to this is what happened in pre-market, this is what happened in RTH, this is what happened in pre-market, this is what happened in RTH. It took the means, it took the standard deviation of it, one standard deviation, and said this is the range. So the math is correct. It's did the market follow the one standard deviation? When it went outside of that one standard deviation, the market's like, I can revert to the mean. And they did. They typically do. All things being equal, though, you want to have this kind of an edge on the market. You don't want to go to war with, armed with RSI, SMA, and market profile, and then throw in a raincoat to really mess things up. Okay? That's not how you want to go to war. You're bringing a switchblade to a drone, armed drone fight. You're just not going to win, unfortunately. Okay? You want to be prepared. You want to have the right data. You want to have the right tools that you're going to use literally, potentially, every single day of trading that you want to trade. And so this is what Price Action Pivoter V2 is. That's all I have for you guys. I know this is a long video. If you stuck through it all the way, kudos, good job. It only benefits you, as I said. Please watch this video. If you end up getting this software, even after you have the demo with me, watch this video several times so that you understand how it works. If you have any questions, please don't hesitate to email me, rafi@pinnaclequant.com, RAFFI@pinnaclequant.com. Till next time, take care of yourselves and God bless.